In 2026, Bitcoin stands at a crossroads. On one hand, its long-standing thesis as digital gold is stronger than ever. Institutional investors are pouring in, major financial firms are treating it as a strategic asset, and global monetary instability is pushing more people to look for alternatives to fiat currency. On the other hand, there are still big challenges ahead: macroeconomic risks, unclear regulations, and the fact that Bitcoin's value still depends heavily on narratives and speculation rather than direct utility. So, is it good to invest in Bitcoin in 2026? The answer is yes, but with caution. Many analysts remain optimistic. Some forecast that Bitcoin could reach $200,000 by early 2026 due to institutional adoption and inflows from Bitcoin exchange-traded funds. Others expect a more moderate range, around 100 to 150,000, depending on how global markets evolve. These wide variations show that Bitcoin is an opportunity, but not without risk. What's coming for Bitcoin next? The first big trend is institutional adoption. More companies, funds, and even governments are adding Bitcoin to their reserves or building financial products around it. This strengthens its reputation as a scarce and valuable asset. The second factor is the global macroeconomic context. Inflation, fiscal deficits, and concerns about the long-term stability of fiat money are driving interest in digital stores of value. In that sense, Bitcoin benefits from fear and uncertainty in traditional markets. The third factor is regulation. As countries clarify their legal frameworks and as Bitcoin ETFs become widely available, the barriers to entry continue to shrink. Lastly, the Bitcoin halving that occurred in 2024 is still having ripple effects, since historically, halvings have preceded major bull markets. Does the global situation favor Bitcoin? In many ways, yes. A weaker global trust in fiat currencies pushes investors to diversify. The demand for digital assets in emerging markets continues to grow, especially among younger generations who prefer decentralized finance. The more institutional infrastructure around Bitcoin becomes established, the stronger its long-term position will be. However, there are also risks that can slow down or even reverse the trend. If global interest rates remain high or if the dollar strengthens, capital could flow back into traditional assets. Regulatory crackdowns or tax restrictions could also hit Bitcoin's liquidity and sentiment. And, of course, if a global financial crisis triggers panic, investors might flee from risky assets, including crypto. When we look at expert opinions, the picture is divided. Some analysts expect another major upward cycle, possibly pushing Bitcoin to new all-time highs. Others warn that after a strong rally, a painful correction could appear in 2026. Financial institutions remain cautious. Most large asset managers recommend only a small exposure to Bitcoin, around 1 to 2% of a diversified portfolio. They recognize its potential but also its volatility and unpredictability. If you're thinking of investing in Bitcoin in 2026, the best approach is strategic rather than emotional. Treat Bitcoin as part of a balanced portfolio, not as a get-rich-quick ticket. Invest only money you're willing to lose. The smartest entry points usually appear after market corrections, not during high phases. A good strategy is to accumulate slowly over time, using dollar-cost averaging, instead of trying to perfectly time the market. Watch for trends in ETF inflows, regulatory changes, and major institutional announcements. These are the signals that often precede strong moves. Also, pay attention to security, custody, and taxes. Unlike traditional investments, Bitcoin requires responsibility for wallet management and awareness of how local regulations evolve. Emotional control is key. If your position doubles, don't assume it will keep going up forever. If it drops sharply, don't panic. Volatility is part of the game. The key is to have a plan before you enter the market. For those who want to go deeper, there are a few essential books worth reading. The Bitcoin Standard by Safidi and Amos explains the monetary philosophy that supports Bitcoin's creation. Cryptoassets by Chris Bernisk and Jack Tatar teaches how to analyze cryptocurrencies as part of a modern investment portfolio. Mastering Bitcoin by Andreas Antonopoulos helps you understand the technical foundation of the system. And Digital Gold by Nathaniel Popper tells the story of how Bitcoin went from an idea shared among cypherpunks to a global financial movement. In conclusion, Bitcoin in 2026 remains one of the most fascinating assets on Earth. It stands between chaos and innovation, between distrust in governments and faith in math. It is not risk-free, but it continues to grow stronger as more people and institutions see its long-term potential. Investing in Bitcoin today is not about gambling on price, it's about believing in a system that challenges the traditional idea of money. Whether you choose to invest or stay on the sidelines, one thing is clear: Bitcoin is no longer a fringe idea. It's becoming part of the global financial reality.